Hello again. I'm Dr. Diana Fite, President of the Texas Medical Association. Thank you for joining us tonight for TMA's Tele-Town Hall on COVID-19. This is the third COVID-19 Tele-Town Hall hosted by your TMA. Tonight I'm joined by Dr. David Fleeger, TMA's immediate past president. Dr. Fleeger?
Thank you, Dr. Fite. We are finishing the process of calling more than 60,000 physicians across Texas. This takes several minutes. Over the next hour, you will hear an update about the impact of the COVID-19 pandemic in Texas, particularly the financial impact on medical practices. You'll hear information about how to keep your practice operating during this challenging time. You will hear about various loan products and their required uses, tax implications, and general consulting on operating expenses. Tonight's panel, joining Dr. Fite and myself, are Christopher Davis and Jim Rice, who are CPA shareholders at Sol Schwartz Associates, Mollie Mailman, a TMA practice management consultant, and Jeppe Gustin Ross, TMA's Vice President of Human Resources. We will answer your questions periodically throughout this call, so stay tuned for instructions on how you can ask them. And we want your answers to poll questions. We'll tell you how to reply to those when the time comes. TMA has devoted close to all of our resources for nearly the last 2 months to COVID-19. We want to help you, help your patients, and your community as we confront this worldwide pandemic. We understand you face two major threats right now: the continuing very real threat this virus poses to your patients, your practice, your staff, your families, and yourself, and the equally real economic threat this pandemic and the stay-home requirements have posed to so many medical practices across Texas. Earlier this year, your TMA Board of Trustees convened a practice viability work group and a task force on COVID-19. These groups have created multiple resources, including a comprehensive practice viability toolkit, multiple frequently asked question documents, webinars and podcasts, and other guidance to help you and your patients and to help you manage your practice. Dr. Fite, we all know there are extremely important issues, and we appreciate our doctors joining us for this crucial information tonight.
Yes, Dr. Fleeger, we knew it was important to conduct another TMA Tele-Town Hall meeting to provide more essential information for our fellow doctors. We hope everyone can benefit by joining us tonight. Since TMA is offering continuing medical education for this event, we will ask a question at the end of this call for CME credit. The Texas Medical Association designates this activity for a maximum of 1 AMA PRA Category 1 credit. The Texas Medical Association is accredited by the Accreditation Council for Continuing Medical Education to provide continuing medical education for physicians. All physicians who remain on the call for at least 53 minutes will automatically receive CME credit. Okay, so here's how to ask us a question or make a comment at any time during this event. Press the 0 key on your phone keypad. A TMA staff member will greet you. Please succinctly tell him or her your question or comment. Soon we'll call on you to ask your question of our experts. Now it's our first opportunity to hear from you, the thousands of physicians across Texas on tonight's TMA call. Dr. Fleeger, what is our first poll question of the night?
Our first poll question for all of you in our audience to answer pertains to your practice volume. Our recent TMA survey found 97% of physicians responding reported a reduction in patient volume, and more than 2/3, or 68%, reported a reduction in work hours and salary. So the question is, when do you expect your practice to return to pre-COVID-19 volumes? Press 1 if you have already returned to full practice volume. Press 2 if you expect to return in the next 1 to 2 weeks. Press 3 if you expect to return to normal volume sometime in the next 4 weeks. Press 4 if you believe it will take more than a month, or press 5 if you don't know. Once again, when do you expect your practice to return to pre-COVID-19 volumes? 1 if you've already returned to full practice volume. 2, if you expect it to happen in the next 1 to 2 weeks. 3, if you expect it to happen within the next 4 weeks. 4, if you believe it will take more than a month. Or 5, if you don't know. We will tabulate the results and return them back to you shortly. Diana?
Thank you. Now I'd like to introduce our first speaker, Christopher Davis. As we mentioned earlier, Mr. Davis is a CPA and shareholder at Sol Schwartz Associates in San Antonio. Mr. Davis will update us on various loan products and their required uses and tax implications. He also will provide general guidance on operating expenses. Mr. Davis, thank you for joining us.
Good evening, and a big thank you to the TMA for this opportunity. As a preface to this, I get 5 minutes and some Q&A time to discuss a condensed version of several trending topics that are all very technical in nature. I certainly will not be able to give any one topic the time or detail it deserves, which is a good segue into my first point. Now more than ever is the time to lean on your trusted advisors, including your CPA, attorney, and banker, to help get yourself and your practice through these extremely challenging times. In the CPA world, there has been a rapid-fire release of new laws with varying degrees of guidance to support the real-world application of these rules. And oh, by the way, we've had to become even better friends with SBA loans, especially that of the Paycheck Protection Program, or PPP loan, and Economic Injury Disaster Loan, or EIDL loan. To be clear, a business can apply for both types of loans. The loaned amounts, however, need to be used for different types of costs. We do think that once the PPP loan funds are exhausted, the EIDL loan may be used for payroll and other PPP loan acceptable costs. Now that many businesses have received the PPP loan, the challenge becomes how do we ensure that we're spending this money to obtain loan forgiveness. To be clear on this point, we have yet to receive final guidance on the PPP loan forgiveness calculation. We know that a separate application will be submitted to your loan provider for forgiveness consideration. We do know that your business will need to use at least 75% of the loan proceeds for qualified payroll costs, with the other 25% being available for rent, utilities, and interest on existing mortgage obligations. We know that under current rules, the measurement period for the loan forgiveness calculation is the immediate 8-week period after receipt of funds. It can be inferred from the legislative text that the costs paid with PPP funds need to be both incurred and paid during this 8-week period. What this means is that expenses for back pay and rent and the arrearages that were incurred but not paid for before the receipt of the PPP loan funds appear not to qualify for loan forgiveness purposes. We also know that the loan forgiveness calculation will include analysis of your full-time equivalent employees, or FTEs, and compare the average to that of a previous period's average, as well as determine if there was a reduction of wages or salary paid to your employees in excess of 25%. Now, this 25% does not apply to employees making over $100,000. Quick note. A reduction in FTEs or wages in excess of 25% will reduce the amount of the PPP loan forgiveness. There appears also to be consideration for the amount of employees rehired at their previous pay by June 30th as well. Now, last week, the IRS informed us that the qualified expenses paid with PPP funds that are subsequently forgiven are not deductible for federal tax purposes. I agree with many practitioners that this is not within the theme of the law. Now, compare this to an EIDL loan, which is closer to a traditional loan and is not subject to the same forgiveness eligibility that the PPP loan has. As such, the expenses paid for with an EIDL loan are deductible for tax purposes under normal laws. In addition to PPP and EIDL loans, several new payroll tax credits have been created that are designed to help employers who incur payroll costs under the required extension of the paid family or sick leave provisions if these laws should apply to your practice. Additionally, a separate credit is available for employers who were either required to partially or fully shut down due to government orders or saw a decrease in gross receipts by more than 50% as compared to the same quarter in 2019. All of these credits are a little more complicated if a practice receives a PPP loan, and I would advise consulting with your CPA on these rules. For many practices, the focus has been on keeping as much cash in the business as possible. The payroll tax credits I mentioned previously can be claimed immediately via a reduction of the employer's payroll tax deposit. Separate to this, a new provision allows a business to defer their share of the Social Security tax through the end of the year. Now, this deferral is for a one-year period, with half being due at the end of 2021 and the other by 2022. This deferral can also be used if a business receives a PPP loan. However, once a business receives notification from the bank that the loan will be forgiven, the business is no longer able to use this deferral. Close attention should also be paid to a practice's normal operating expenses to see where both cuts and negotiations can be made to delay payment of fixed expenses. This would include items such as rent, payables, and any other existing debt. Changes were also made to several tax laws, including the depreciation rules on leasehold build-out, formerly known as the retail glitch, and the tax treatment of certain net operating losses and excess business loss limitations. These don't have the appeal of an immediate tax credit, but should be reviewed as it applies to your specific tax situation. In closing, and to make an observation of the obvious, all physicians and practices have been greatly impacted by this pandemic. I cannot thank each and every one of you enough for the sacrifices made during this time. I am extremely grateful that Jim and I are allowed this opportunity to offer some hopefully meaningful advice regarding a fast-paced and ever-changing financial environment.
Thank you, Mr. Davis. We appreciate you joining us to provide this valuable information. And of course, we thank you for your service in helping Texas physicians during a very challenging time. That was a lot of information very fast. In just a moment, all of you doctors listening in will have your first opportunity to ask a question. A reminder to do so, please press the 0 key on your phone keypad and briefly tell the TMA staff member your question or comment. Then continue listening to the call in the queue, and at the proper time, we'll call on you to ask your question of our experts. But first, Dr. Fleeger, you have the first poll question results.
Yes, Diana, here are the results of our first poll question. We asked our physician audience when they expect their practices to return to pre-COVID-19 volumes. 51% of you said greater than 1 month, and 26% said I don't know. So clearly 3/4 of you are where I would be, and either I don't know or it's going to be a month or more. 14% said 1 month, 6%, 1 to 2 weeks. All right, the optimists. And 4% said full practice volume already. So I am jealous. That's incredible. So congratulations to that 4%. The rest of us are jealous. So with that, I'll pass it back to Dr. Fite.
Thank you, Dr. Fleeger. Now, everyone, it's time for you to ask your questions of our panelists. We have a few people waiting in the queue. For those of you not in the queue yet, a reminder to ask a question. Please press the 0 key on your phone keypad and brief the TMA staff member on your question or comment. Soon we'll call on you to ask your question. Our first caller is Dr. Shahid from Humboldt. And Dr. Shahid, I understand you're wondering about group practices and salaries. Do you want to go ahead and ask your question, please?
Yes, hi. My name is Dr. Shahid. I work in Humboldt, Texas, and I'm a salaried physician for a group. The group has already procured the payroll protection plan money as well as the Medicare grant, but has also slashed our salaries by 30%. And I wanted to know and find out what can we do as salaried physicians to get our grants or help from the government. Thank you.
This is Jim Rice. I would like to start with an answer to that. One of the first things that should be looked at is, to the extent that any employee in Texas has a reduced salary, there is the unemployment benefits that have been absolutely juiced up to include what would have been the normal unemployment benefits plus an additional $600 a week. So that's one of the first things that should be looked at when an employee is not getting their regular salary for whatever reason. And so look at that. But there's a very important issue here. To the extent that someone has received a PPP loan, then salaries should not be reduced by more than 25% for the calculation of the forgiveness. So that's an issue that should be looked at. Now, understandably, because of the crisis that is going on, the government has said to the extent that salaries are corrected by June 30th, then the forgiveness is back online. Again, we're waiting for guidance, as Chris Davis has said, but that's the initial answer to that question.
Thank you. Our next caller is Dr. Mahesh Dave from Bryan, and you had a question related to Medicare, I believe. Go ahead.
Yes. So this is Mahesh Dave from Bryan, Texas. I wanted to know on the PPP and Medicare accounting, how do you identify what can be paid, what cannot be paid, like item-wise, and is there any kind of list available? What things are covered under the Medicare and PPP and what is not?
Go ahead.
Well, I can, with regard to the PPP loan, the items covered will be qualified payroll costs, it's gross pay, and then also rent, utilities, and interest on mortgage obligations are qualified costs for that loan. I can't speak to the other Medicare question.
The next question is from Dr. Shah Islam from Corpus Christi and has to do with getting the PPP. Go ahead, Dr. Islam.
Thanks for taking my call. My question was that in case if someone receives the PPP later on, like May, and the 8 weeks starts from where? If it is from April, then we lost 1 month. And if it is for 8 weeks from the time you received, and sometime even if you receive, we are not dispersing it to the staff for the salaries till the month of May started. So where this 8 weeks starts from and ends? Thank you.
It's a great question. So the 8-week period starts the day you receive the funds.
So to the extent that you receive the funds in May, still, that's when the 8-week period begins. There are requests that the 8-week period be closer to an actual pay period because of the potential odd situation of being in the middle of a pay period. So we're waiting for more guidance, and that certainly makes sense. But don't worry about the issues of June 30th or anything else. The 8-week period begins upon receipt of the funds from your bank.
Okay, thank you. Dr. Uthamalan from Nacogdoches, you had another question about PPP. Go ahead.
Hello?
Yes.
Could you hear me?
Yes, now we can. Sorry about that.
Hi, sorry. They cut off the speaker. That's fine. Hi, it's Yutham from Nacogdoches. So this question is specifically for PPP loan forgiveness in terms of redistribution of the fund specifically for the physicians. Most of the physician salaries around Texas are more than $100,000, as we know. So when you redistribute the 8-week period of the loan amount, are we going to cap the physician salary to $100,000 for the first 8 weeks of redistribution so that you are just justifying the loan forgiveness, or you give the salary as a usual salary, which will be mostly greater than $100,000? How do you prepare the payroll for the 8 weeks immediately after receiving the funds?
We are waiting for additional guidance, but it does not make sense that you would have to be issuing 2 different payroll checks, one to comply with the $100,000 cap, which essentially is little more than $15,000 in an 8-week period. So for calculation of the loan forgiveness, it will be limited to this $15,000 amount, which is essentially the $100,000 divided by 52 times 8. To the extent that the salary is more than that, then that salary will not be counted towards the forgiveness calculation of this PPP loan. Now, one of the questions that is always asked is, well, my physicians certainly are used to earning more than $100,000, but the crisis has got us in a very difficult situation. Then we have to fall back to either looking for unemployment benefits as one idea, looking for traditional or other SBA loans to cover that so that the physician can continue to maintain the cash flow that they're used to.
Mollie, did you want to add to that?
Yes, and this is Mollie Mailman, and it depends on how your practice is set up as well. There's a lot of physicians doing interest-free loans within their group, giving time to pay those back. So as right now productivity has dipped, things will ramp back up with production, and then things can be paid back on your compensation model. So it's really just individualized to which group, if you're an employed physician or you're a part of a larger private group.
Okay, thank you. Next, we have Dr. Den from Dallas, another PPP question. Go ahead, Dr. Den.
Hi, my question was regarding the PPP loan and the rent. If I was able to make arrangements with my landlord in deferring the rent, should I go ahead and no longer do that deferment, or should I just go ahead and pay the rent for the 2 months in that 8-week period?
This is Jim Rice. That's a very good question, because we certainly want to maximize our loan forgiveness, and it is an issue of what is actually paid, as the government is trying to assist in the payment of expenses and not just have them deferred. To understand the full forgiveness, when we talk about payroll costs, that's salaries, that's the employer's share of health insurance. To the extent the employer wants to include the employee's share of health insurance, the employer's retirement contributions. So all of these things should be measured, and to the extent that you still are unable to get close to the full forgiveness, then you should look prior to the 8-week period expiring to pay some rent, even though it may have been negotiated to defer. You can continue to negotiate that with regard to saying that you will make some payment to the extent that you're able to extend your deferment at a later date. Does that make sense to you?
Yes.
Yeah, because I think what it is that it deferred for the last 6 months of the year. So since I was thankfully able to receive the initiation of the PPP loan, then I was wondering if I should go ahead and pay this month and next month's rent immediately, or just this month immediately.
I would look closely and be sensitive to when the 8-week period expires from the date that you receive the monies. Okay. And get with your accountant to see what amount of rent would need to be paid in order to maximize your loan forgiveness. Because it is a mathematical calculation.
Thank you. We have one last question for this section, but we have 2 more question sessions. This last one right now will be Dr. Zafra from Corpus Christi, another PPP question.
Yeah, hi, good evening. Yes, my question is with the 25%, you said that it can be used for non-payroll, expenses, but does that include only the utilities, rent, but does it include the other operating expenses? Like, I pay my biller every month, as well as the EHR. Will that be also considered to be added onto the 25% for the forgiveness? Because, 75% is for the payroll, and the rest, the 25%, has to be disbursed as the other expenses. But does that include, those I've mentioned, Doctor?
Well, unfortunately, the rules are pretty clear with regard to what the PPP loan funds can be used for. And with regard to that 25% piece, it's strictly rent, utilities, and then also the interest expense on existing mortgage obligations. And so other types of operating expenses, such as EHR or other operating costs, are not included with regard to the loan forgiveness. And so that's the strict guidance they've given with regard to the PPP loan.
Thank you. Those are all good questions. Thank you to those of you who asked them. We'll provide another opportunity for you to ask questions a bit later in this call, as I mentioned. I now would like to introduce our next speaker, Mollie Mailman, who is one of TMA's practice management consultants. Mollie will discuss some of the things you can do that directly affect the revenue stream that can help your medical practice be viable during and after the pandemic. Mollie, thank you for joining us.
Thank you for having me. Good evening. My name is Mollie Mailman, and I'm a practice management consultant here at TMA. For the last 2 months, an overwhelming majority of practices have seen a decrease in production due to COVID-19. This directly and severely affects a practice bottom line and financial well-being. However, there are several operational items within management or your own personal control that have an impact on practices' cash flow. Here are some of the best practices that you can implement not only during this time of pandemic, but continuing post-COVID-19. Utilize a financial dashboard to track productivity and expenses, isolating the variances from month to month and year to year. For a financial worksheet template, please go to TMA's Practice Viability webpage and access page 12 of the COVID-19 Practice Viability Toolkit. Conduct an overhead analysis, analyzing expenses and benchmark against specialty standards to determine an appropriate overhead percentage. Note if your expenses per category are above, in line, or below the benchmark median for practices similar to yours. Your specialty society and organizations such as MGMA may be helpful in pulling this data. Evaluate your key financial indicators and calculate collection ratios, reviewing your aging categories for both patient accounts and individual payers. Analyze billing data for each physician and other non-physician providers and the practice as a whole. If the numbers for an individual physician or provider is below the benchmark average, ask why that is. Run system-generated reports in your practice management system. It's important to keep your pulse on the financial health of your practice on a consistent, regular basis. For example, pay attention to things such as time of service collections, the days in AR, your payer mix, and payment plan arrangements. Also, use specific adjustment codes to differentiate between the different types of write-offs, such as client courtesy discounts, bad debt, and Medicare adjustments. Pulling reports to review these monthly for fluctuations. Also take a look at evaluating billing and collection processes and workflows. Separate revenue cycle management duties amongst staff for good internal controls. When handling cash, implement a system of checks and balances. For example, have one person collect the cash, another accountant attest to it, another one preps the daily deposit bag. And also note, when working old account receivables, start with the oldest and largest balances first. Write off any small balances with $10 or less. It is less expensive to write these off than incurring the expense of mailing the actual statements. These are a few of the processes that can help your practice stay viable, not just during the COVID-19 pandemic, but on an ongoing basis. For more information regarding financial health of your practice, you can visit TMA's Practice Viability webpage at www.textmed.org/practice viability. Additionally, for general assistance questions, the TMA Knowledge Center staff are available to help. Payment advocacy reimbursement specialists can assist with billing, coding, and payer-specific questions. TMA Practice Consulting can help if you need hands-on assistance with troubleshooting and refining operational issues within your practice. Thank you so much for your time. Dr. Fite, I now turn it back over to you.
Thank you, Mollie. Now it's time for our second poll question. Dr. Fleeger?
All right, good. Second poll question. And a little background. 3/4 of physician respondents to a recent TMA survey reported first implementing telemedicine in their practice since March 1st. So here's a question for you, and I'll tell you there is no all of the above for you gunners who like to do all of the above. First is, what challenges have you encountered in delivering telemedicine to patients? So what challenges have you encountered in delivering telemedicine to patients? Press 1 if you encountered language barriers with your patient. Press 2 if you encountered technical literacy issues on the patient's part. Press 3 if you experienced inadequate technology on the patient's part, which might include Wi-Fi or smartphone issues. Press 4 if the patient had inability to pay. Or 5 if you experienced no challenges or problems. So once again, what challenges have you encountered in delivering telemedicine to patients? Press 1 if you encountered language barriers with the patient. Press 2, technical literacy issues on the patient's part. Press 3 if you experienced problems with inadequate technology on the patient's part. Press 4 for inability to pay. Or 5 if you experienced no challenges or problems. We will tabulate everyone's answers and report the results soon. Diana?
Okay, it's time for you to ask more questions of our panelists. A reminder to get in the queue to ask a question or make a comment, just push 0 on your phone. A TMA staffer will take your name and the gist of your question and place you in the queue. We've got quite a few waiting in the queue. Thank you for your patience. Our first caller is Dr. Oakes from Westlaco, Texas.
Yes, my name is Dr. Oakes. I'm a practicing pediatrician in Westlaco. And my question is regarding the PPP loan. It's a long story, but I anticipate I may have more on my loan left at the end of 8 weeks. You know, I really want to use as little as I can if I can afford it. So what do I do with the amount that's left? Or how do I return it? Or what's the best way to manage it?
For our CPAs, please.
This is Jim Rice. Shall I take the first crack at the answer?
That'd be great. Thanks.
So first of all, you're very fortunate to be in this situation. For my physicians that are also in this situation, they're looking closely at the issue of what are the loan terms should I decide to go ahead and have amounts that are not going to be forgiven because I'm not using all the funds. Should I go ahead and keep the loan anyway? The loan provisions are very favorable, so you should talk to your bank with regard to whether or not you should just retain this loan because of the favorable terms for this loan. The loan itself was truly designed to pay for salaries, and so you do want to make sure that you are going to use that to pay the salaries and, of course, the health insurance premiums, retirement contributions, rent, utilities, and if you have an existing mortgage on the property, the interest on that. But to the extent that monies are left over, you can remit the monies back. And as I understand, the monies would be remitted back to the bank, to the lender. So that's my comment with regard to that.
Dr. Santa Rosa is next from Dallas, another PPP question. Dr. Santa Rosa, are you there?
Yes.
Yeah, we're curious about the certification of need for the PPP loan. There's a lot of articles going around now about what actually creates the necessity for the PPP loan in the practice.
The SBA certainly concerned that there are companies that did not need the money and still applied for the loan. And certainly in the initial application, there had to be a representation of an anticipation of loss of revenues. So the SBA has announced that it will review loan forgiveness applications in excess of $2 million and intends to review other applications, forgiveness applications below that amount. The ability to do that is going to be extremely difficult. But certainly we're all concerned that for those who received money who don't need it, should consider paying it back immediately. But at the time that the loan application was made, it's extremely difficult to make the representation that you were not going to be affected by that. So I think the government is going to understand that, and we'll just have to deal with the fact that some of us are fortunate and don't have to use the money. Did I answer your question?
We're still confused because we expect a drop in revenue, but is it going to put us out of business? Possibly not, but is it a drop in revenue? Yes. So I mean that's where the confusion comes in.
To the extent that you are affected by this crisis, and everybody is probably affected one way or another, then I would not be as concerned with the ability to certify in the forgiveness application that you were in fact hindered. In fact, the financial hindrance could take months and months for us to fully understand. So I would not be as concerned about that, especially if you are seeing some financial damage already.
Go ahead. Did you have one more comment?
No, that was it. Thank you.
Okay, thank you. Let's go to Dr. Jadav in Sugar Land. Another PPP question.
Yes, my one question to PPP loan is that when you do the application and all, they ask you about how much is the expense, plus they ask about how many employees you have. Now, this is a very difficult time, not for doctors, employee also. and daycares are closed, and also I have been talking with many physicians. They also go through same thing. So suppose if we have 5 employees and one employee is not able to come to work because she has multiple children and daycares are closed and we've been paying her. Now everything is open, but still she's not able to come. So what are the options for us to keep on just paying her even if she don't come? Because not for medical reason, but her personal reason. And is there anything, even though we spend 75% of the loan amount for payroll, still we need to hire somebody because we said, yes, we have 5 employees.
This is Jim Rice. I'd like to make a comment. The government has made it clear that for employees who do not come back, even though there is a situation where they are able to, and the employer has in fact made the offer to bring them back at the salary that they were at, then they will not be counted against for the calculation of the loan forgiveness under the concept that the full-time equivalent employee is no longer there. So that's one aspect. And so to the extent that you need to hire someone to replace this person, then that salary for that replaced person should qualify.
Thank you.
Thank you. Dr. Gilbert Garcia from Humble, another PPP question.
Yes, this is Dr. Garcia. I had a question here. When I applied for this PPP loan, and they indicated, what were the uses for, and of course, at that time, information was very cursory, and so it was for rent and salaries and what have you. And I also put medical supplies, but I didn't see them reject that. So are medical supplies included in this or not at all?
So with regard to the calculation for the PPP loan forgiveness, the amount of the proceeds used for medical supplies is not included in that calculation. So it's not a qualified cost with regard to the loan being forgiven. So certainly the loan can be used for other costs, but you wouldn't expect to get the amount used to be forgiven by the lender.
Thank you. And now we have Dr. Ghulam Hussain, one of our Texas physicians, but listed in North Carolina. So go ahead with your CPA question.
Well, I'm sorry. Actually, I am in North Carolina, but I have a Texas license. My question is that the 25% which we use for the non-payroll money, is that 25% as of the whole amount, or is it 25% of the amount which is forgiven during the process?
That's a very good question. The SBA had come out with additional guidance with regard to your question, wherein that they said that non-payroll costs could not constitute more than 25% of the calculation for the amount to be forgiven. And it truly is a mathematical calculation, but what you should know and what your accountant should know is that the best way to calculate the amount of non-payroll costs that can be included for forgiveness is simply by taking the total salary that is paid for that 8-week period and dividing it by 0.75. That number is the number that it would be allowed to be forgiven for other than payroll costs, the rent cost, the utilities cost, the mortgage interest cost.
Okay. We'll go next to Dr. Jose Barrera from San Antonio, who's got some questions about a couple of practices. Go ahead, Dr. Barrera.
Thank you so much. Thanks for doing this, too. This is Jose Barrera from San Antonio. We have 2 practices. We have a plastic surgery practice, and we have an ENT practice. So we are advised to apply for 2 different PPP loans, and we actually received 2 different PPP loans from 2 different banks, which we were delighted for. And we have 2 different sets of payroll, but some employees work, I have a few employees that work for both companies. And so when it comes time for loan forgiveness, is the number of payroll employees in each loan going to be forgiven, even though they may be doubly accounted for? That's the first question. And the second question has to do with retirement benefits went along into my calculation for one of the PPP loans. Is that still considered an allocated benefit for the 25% forgiveness?
To answer your second question first, the answer about the retirement benefits, they are part of the definition of payroll cost. So it's not just salaries. With regard to your first question, the calculation of the forgiveness is going to be based upon actual salaries paid from each location. And since each location is its own separate entity, it will have separate 941s and payroll costs. So each entity will use the payroll that it paid. Now, to the extent that in the application process, an employee was listed on both sides, if they were not considered a full-time equivalent, working 30 hours at one location, well, that's all right. The government measures based upon full-time equivalents based upon the calculation that you gave them initially. So I think you're okay with regard to that. There's always the issue of, is an affiliated group separating different entities to get more of the loan? In your case, that should not be an issue.
And hi, this is Mollie Mailman. I just want to reiterate what counts as payroll costs. So it's not just salary. On top of that, it's local and state taxes assessed on the compensation. It's also employee benefits such as vacation, parental leave, family medical sick leave, retirement benefits. So just make sure that you're capturing the whole picture.
Okay, thank you. Once again, thanks to all of you for your insightful questions. It's helpful to hear what is on physicians' minds about the financial impact that COVID-19 has had on your practices. We will have one final question and answer segment later in this call. Dr. Fleeger, you have the results of our second poll question.
Yes, Diana, we asked everyone what challenges they might have encountered in delivering telemedicine to patients, and 49% had inadequate technology and another 26% technical literacy issues. So clearly 75% sort of the technical aspects of doing telemedicine. 4% had patients with inability to pay, 3% language barriers, and then the lucky, once again, 18%, whom I'm jealous of, with no challenges. So interesting results. Diana, back to you.
Thank you, Dr. Fleeger. That is interesting. Now I'd like to introduce our other CPA presenter tonight, Jim Rice, to share with us a few best practice tips for moving forward financially as we think about resuming normal practice operations. Mr. Rice, thank you for joining us.
Well, thank you, and thank you to TMA for this opportunity. Having been working as a CPA for 40 years, I've gotten to know TMA much better, and one of the first things I want to say is that TMA has the COVID-19 Practice Viability Toolkit, which is essential to be able to look at and guide you through this crisis and to find the different resources and best practices and steps that should be taken. So I definitely think that the TMA's COVID-19 Practice Viability Toolkit should be on hand and reviewed. And no, TMA did not ask me to say that. As a CPA, one would expect that I would begin something along the lines of comparing financial statements, timely and accurate, but I really want to start with something very different, and that is with regard to the staff. Quite often, my physicians are not hiring the best staff and not paying the ones that are the best salary. A physician cannot be everywhere in the office with regard to the receptionist, with regard to a physician assistant, with regard to the biller. And so it's essential for best practices that you have the best of staff. And along those lines, at this time, you really should be asking and talking to them with regard to their morale. How are things going for them? With regard to their family situation, how is the office morale? Have there been discussions with them as to what the plan is to completely reopen the practice? Employees want to know. And quite often, employees have great ideas on how to make an office more efficient, on where to cut costs, on what problems there are. And so you should be tapping into their resources. So the staff is a big deal. Another thing I see is with regard to the actual behavior of my physicians. They want to take care of their patients. They want to be a great physician, but what they don't remember is that they're in a business. They're in a business to make money and to take care of family and employees. And so the mindset is extremely important for my physician to know that they have to be fully engaged in their practice. They need to understand, not in great depth, but more or less what each of their employees does. They should be inquisitive as to what the employees are doing and how they're doing. This type of inquisitiveness goes a long ways also towards preventing theft. Theft is a major issue for my physician practices. So that's a big deal. I know that there's a lot of discussion with regard to our physicians being in a burned out situation, being depressed, and that's a big problem. And we're seeing our physicians leaving the profession and thinking hard about why they even got into it. So that's important that our physicians understand how they are, how they're doing, what can they do to deal with burnout and depression, because all of that plays now on into the employees as well and onto your patients. With regard to financial data, we truly now know how important it is to be as efficient as possible. We've always talked about that, but now it's kind of slapped us in the face. One of the first things that you need to make sure is that you have a good bookkeeper. And I don't mean a CPA. A good bookkeeper is worth their weight in gold. As a CPA, I can do nothing to help my physician if the books and records are not timely, if they're not accurate. And so that's a big deal. Also, once you know that you have a good bookkeeper, you should be reviewing the financial information that is placed on your desk. A lot of my physicians don't even know how to read a balance sheet. They don't know how to read a profit and loss statement. And they get them and they put them on the corner of their desk, and then they get busy. They get busy with everything else that they're doing and how they're so consumed nowadays with administrative responsibilities. The financial statements are a big deal. And if you don't know how to read them, be it the statement of assets and liabilities or the balance sheet or the profit and loss statement or the cash flow statement, then you should insist with your accountant that they sit with you and explain how to read these, because that will open your eyes to a lot of information. More particularly, what I see is that physicians do not look at what's called the cash flow statement. The cash flow statement is a period statement. It will tell you from a beginning point what your cash was, and then it walks through what happened to your cash. Certainly in terms of collections and certainly of payments, and with regard to loan repayments, to the change in your accounts receivable, the change in your accounts payable. So the cash flow statement is a big deal. Rarely, though, do I see accountants prepare that for their physicians, but it's important because one of the first questions I always get is, where did the cash go? I'm working harder and I have less cash. And quite often, just being knowledgeable about where the cash went eases their minds and allows them to more fully operate as a business person. I'm big on making sure that you have good consultants. TMA is an excellent practice consultant group. Your CPA is an important consultant. Your banker, even more importantly now, is an important consultant. A good banker does much more than just process a loan. And if you have a banker that does nothing more than that, then you need to change bankers. I don't mention attorneys because they come in and out as we need them, but a good attorney also can be extremely essential for different occasions. As a CPA, sometimes I'm asked to go in and do an internal control analysis. And that can be many different things. It can be follow the cash as it comes in, be it from the patient or from insurance companies to the cash going out. Sometimes it can be with regard to just much more simply, are my receivables being processed timely? Am I getting the collections? TMA is a better source for that, but as your CPA, there's a lot of things that we can do to try to watch and see where the practice is inefficient. Quite often, even just having your CPA walk through the offices and ask basic questions as to what each of the staff are doing can curtail or absolutely deter any theft. So that's an important aspect also of best practices. You don't need to be working hard and have everything done efficiently if money is being stolen from you. There's all this talk about negotiating with your landlord and vendors, and I know most of you all have already done that. Continue to do that even after the crisis is over. The vendors want your business. You are in the driver's seat with regard to how you're going to negotiate with them. And quite often, discounts can be had even when the invoice is clear and you think that this is just a standard transaction. You'd be surprised how if you ask for discounts, you'll get them. And I think the last thing I want to mention is that it is important that you meet at mid-year and year-end with your CPA. The CPA can provide some very strong tax planning, some financial planning, some asset protection planning, all important things that are all part of keeping you feeling that you're in control, avoid the burnouts, and make sure that you understand that what you have is a business. And that's what I have to say.
Thank you, Mr. Rice. We appreciate that advice and insights. I was almost surprised to hear you bring up burnout and depression. We appreciate that. Dr. Fleeger, do you have our next poll question?
Yes, Diana. Our next poll question shifts gears a little bit here. How much trouble or complication has the new Texas Medical Board requirement for patients to be masked in all appointments been for your practice? So how much problem has it been for that new TMB requirement for your patients to be masked at all appointments? Press 1 if this new medical board requirement is a significant problem that is depleting or will deplete your PPE resources. Press 2 if you believe it is a challenge but you are managing it. Press 3 if you are okay with the requirement as long as patients can provide their own masks. Press 4 if you believe this is not a problem or you have sufficient PPE for patients too, or press 5 if you were not aware of the requirement. So once again, regarding the TMB's new requirement for patients to wear masks for an appointment. 1, if this poses a significant problem and would deplete your PPE resources. 2, if it's a challenge but you are managing. 3, if you are okay with it if the patient can provide their own masks. 4, if there is not a problem as you have sufficient PPE. Or press 5 if you were unaware. We'll share the answers in a bit. Diana.
Okay, now is your final opportunity tonight to ask questions of our panelists. If you're not already waiting in the queue, to do so, just push 0 on your phone. A TMA staffer will record your name and question and place you in the queue. I'll then call on you by name. Our first caller now is Dr. Juan Rodriguez from Brownsville with yet another PPP question. Dr. Rodriguez?
Yes.
Go ahead with your question, please.
Well, my question was that I received the PPP now in May, and I did not pay myself on April because I was running out of funds, and I just pay my employees. And now, can I pay myself my salary from April? Because that will count me in the forgiveness. Am I allowed to do that? That was my first question. My second question was if that money, do I need to? Is that money going to be accounted as a income in my IRS report this year?
Absolutely, both great questions. I will also answer your second question first. So any payroll issued to yourself from your practice will be reported on your personal income tax return, and of course you'll pay income tax on that. it'll be reported on your W-2. As a preface to answering your first question, if your salary was included in the calculation when you applied for the PPP loan originally, then you are required to pay yourself a salary now that you've received the PPP funds. I will also add that we've mentioned that the 8-week period begins once you receive the funds, and that period is with regard to the loan forgiveness calculation. And I mentioned that in that what will be included with the loan forgiveness calculation are the costs, your payroll moving forward, not the payroll in April that you didn't pay yourself. And so there's a distinction there where I can't use the PPP money to pay back pay, but certainly now that I've received it, I can now use that to pay myself if it was included in the PPP loan calculation, if that makes sense.
Okay, thank you. Dr. Narain from Plano, we have another PPP loan question.
Yeah, hi, this is Dr. Narain from Plano, Texas. Well, I have 3 office locations, and we have a combined practice of psychiatry and family practice. We were able to secure a PPP loan. We have 32 employees, and I have a two-pronged question. The first question is, 2 of the employees quit on their own accord, and what happens in terms of the final calculation in terms of forgiveness? And the second question is, if we did make a profit during this time, then what happens to the loan forgiveness if we continue to use the funds as directed?
This is Jim Rice. With regard to the issue that an employee is no longer with you and has gone elsewhere, but was part of the PP loan amount calculation, to the extent that you have documentation that you offered for them to be employed with you at their regular salary and they decided to go elsewhere, you will not be penalized under the calculation for the full-time equivalent employees that were first provided for the loan application. All right? Now, to the extent that some other salaries had to be paid to replace that person, those salaries should be allowed to be included in the calculation to have the loan forgiven, because the loan was designed to pay for the salaries. With regard to your second question, if you make a profit, will the loan still be forgiven? There is more and more discussion with regard to abuse by those who did not need the money but still received the money. We're still waiting to get more and more guidance on this, but certainly I don't believe that there's anything of the intent of the law that says that you had to actually have a loss. So having a profit but still being able to have the loan forgiven should be something that should be allowed. To the extent that the monies were not needed at all and were not used at all, then it probably should be discussed thoroughly as to whether you should give that money back or not. As I had mentioned before, the SBA is going to review loan forgiveness applications of $2 million or more for any potential abuse. Whether they're able to review smaller loans, we don't know yet. So it truly is an issue of, we have to wait and see further how much more discussion there's going to be with regard to practices that in fact did not have to use much of the money.
Okay, next we have Dr. Yaramada from Webster. Another PPP question, please.
Hi there. Thank you very much for doing this session. I have 2 questions. So the first question is, I have a small practice. I do the traditional practice. So I also do the clinic, mostly like part-time clinic, I can say. So I have only 2 employees, and then I kept them on 1099 as a contract employee. So I don't do any payroll or anything. So I'm trying to see, is that a problem? Like, because I submitted my PP last week. I think I just got a message saying that it got denied. So I'm trying to see, is that 1099 versus W-2, is that a problem? And second question is, most of my work is inpatient, and then I have like around 40% outpatient. So the inpatient income is stable, but the outpatient did go down. So how do they look at it? Everything is under the same LLC. Is it going to make any difference, the total income-wise versus just the office income?
So once again, I'll answer your second question first. Your total income shouldn't be a factor with regard to applying for and being approved for a PPP loan, and so I wouldn't be concerned with that. Now, I may have missed the beginning of this a little bit. I got a little confused about your question with regard to the W-2 versus 1099s. The PPP rules are pretty clear that when you apply for the initial loan, that you use the salaries or wages paid to your employees on a W-2. So they're actually your employees, versus your qualified payroll costs do not include amounts that you pay to 1099 contract employees. But the 1099 contract employees can separately and on their own apply for a PPP loan. So if there's a situation where I've converted my W-2 to, say, 1099 employees, first I would make the comment that if they're your employees, they're not your contract employees, and so I would immediately switch them back to W-2 employees. But really, it's the W-2 wages that are qualified for the application for, and then the loan forgiveness piece of this. And then if they are 1099s, I would encourage them to separately apply for a PPP loan.
I just want to reinforce that point. The PPP loan is also for independent contractors and self-employed people. The calculation of the amount of loan they can get is based on net income. So that would be somewhat commensurate with the idea of a salary. So independent contractors, self-employed people, if they have not applied for the PPP loan, should definitely be looking at that.
Okay, thank you. And thanks for these great questions. There actually are a lot more people in the queue that we can't get to, but we'll tell you in just a minute how to email questions that were not able to be asked. Dr. Fleeger, do you have answers to the third poll question?
Yes, Diana. We asked our physician audience how troublesome it is for their practices for the new TMB requirement for patients to be masked in all appointments. And so 51% said they're okay if the patient provides masks. And certainly I've seen that in my experience in my practice. When we call and do our COVID screening, we tell our patients to bring a mask to wear when they're there. 17% said it challenging but managing, and another 10% said it wasn't a problem because they had sufficient PPE. So about a quarter of you are doing okay with it. The last quarter is 14 with have a significant problem, and then another 8% were unaware, i.e. they don't know they have a problem. So 23% of you basically have a problem or don't know you have a problem. So good information. We appreciate it. And now I need to ask you our final poll question, the CME evaluation question. Which step you will take as a result of participating in this Tele-Town Hall event. So press 1 if you will apply new knowledge or practices in response to the pandemic's impact on your practice. 2, if you will use information learned to modify any practice operation elements of your practice. Press 3 if you will change the way you monitor the financial viability of your practice. Press 4 if you will do more than one of the above, or press 5 if you will do none of the above. So once again, which step will you take as a result of participating in this Tele-Town Hall event? Press 1 if you will apply new knowledge or practices because of the pandemic's impact on your practice. 2, if you will use information learned to modify your practice's operations. Press 3 if you will change the way you monitor your practice's financial viability of, or press 4 if you will do more than one of the above, or 5 if you'll do none of the above.
Thank you, Dr. Fleeger. We're near the end of our time. We want to thank everyone who joined us this evening. We hope this TMA service has been beneficial to you. Our goal is to help you respond to this serious public health threat and to empower you to keep your medical practice viable now and in the future.
So if you're not able to ask a question of our panelists tonight but wanted to, please email TMA anytime at knowledge@texmed.org. That's knowledge@texmed.org, and TMA staff will reply in the coming days. Physicians who remain on the call for at least 53 minutes will automatically receive CME credit. You do not need to do anything to receive that credit. Again, we have your number and a log of how long everyone stayed on the call, so if you listened for at least 53 minutes, you will receive CME credit. Thank you, Dr. Fite.
I want to give special thanks to our expert presenters this evening, Christopher Davis, Jim Rice, Mollie Mailman, and Jeppe Gustin Ross. I also want to thank Dr. David Fleeger for his assistance in helping to lead this call. For more information about this evolving situation, please visit TMA's COVID-19 webpage, www.texmed.org/coronavirus. That's texmed.org/coronavirus. Once again, I'm Dr. Diana Fite, your TMA President. Thanks again for joining TMA's Tele-Town Hall on COVID-19. Good night.